Hello and welcome. You're watching a brand new episode of All About Your Company, and today we are going to be putting the spotlight on Crizac. Let's understand a little bit about the company first. In terms of the overview, it was incorporated in 2011, headquartered in Kolkata in West Bengal. It's a platform company. It acts as a technology-enabled bridge between students, agents, universities. There is no larger group holding. It's a promoter-owned with a market cap of about 3,400 crore. In a nutshell, this talks about the company. Let's understand what the company does. Now imagine if there is a student in Ahmedabad, let's say, wants to study in a university in UK. There is an agent who helps the student prepare and apply to these universities, and Crizac's platform then connects that agent to about 350 universities across 7 countries. These universities review the application on behalf of the student on Crizac's platform. The student gets admitted, the university pays Crizac a commission. Crizac keeps its share and then pays, out of that it pays the agent their share. Now repeat that across about 14,000 agents and 1 lakh applications per quarter. That is the scale of the business, and that in a nutshell also sums up what the company does. Let's understand the business. 3 aspects of the business. You've got the supply side, the demand side, and the end beneficiary. On the supply side, you've got agents. They've got an agent network of 14,000 plus registered agents across 80 countries like India, Nigeria, Bangladesh, Pakistan, and Vietnam. On the demand side, you've got universities. They've partnered with 350 plus universities across UK, Canada, Australia, Ireland, New Zealand, UAE, and very nascently into USA as well. Over 20 of their top 30 university clients have been clients with them over the last 5 years. So that's the stickiness of the nature of the relationship that they have with their existing clients. Let's talk about the end beneficiary. That's students. Students do not interact with Crizac directly. They work through agents. And remember, India and China contribute nearly 40% of the global international student pool. The biggest opportunity that lies here for the company is India's outbound student population is expected to reach 25 lakh by 2030 from just 15 lakh all the way back in 2023. And that is the significant market that Crizac has the opportunity to tap and capitalize on. Let's talk about some of the services that Crizac provides. In terms of their core services, they look at student recruitment, end-to-end application processing for students, technology platform via which they manage agents, students, and university workflows, and of course some university services that they provide to their clients. Beyond this, they are foraying into some other services. Their emerging segments and services involve student accommodation via third-party providers. That was launched in Q2 FY26. So what is the progress there? What's the growth opportunity over there? We're going to be quizzing the management on that. Also student loans, forex, visa assistance, their AI marketplace app Edu Mentor, that is also something that we are going to be talking about, and foreign admits partnership. These are some of the other segments that Crizac is building its presence in. In terms of scale of operations, 1 lakh applications are processed per quarter with an acceptance rate of approximately 10%. Revenue is a function of enrolled students and not the students who have been enrolled into universities, and not in terms of the applications submitted. So that is another positive. There is no inventory risk here. There is no credit risk here, no capital risk here. It's a debt-free company, zero debt, so no debt risk over here as well. And variable costs are proportionate to revenue, leading to stable margins. Quickly taking a look at what the revenue contribution is. About 96 to 97% of its revenue comes from UK, 2% from Ireland, and 1% from others, out of which USA is still at a very nascent stage. Student mix, 49% of its student enrollments come from India, 35% from rest of Asia, 16% from Africa. That, in a nutshell, is everything you need to know about the business on the fundamental side. Now let's start talking about the earnings, the strength of the business, the financials. Let's start by talking about the profit and loss account first. On a year-on-year basis, there has been good growth in revenue, growing at a rate of about 30% for a 3-year CAGR. EBITDA also has been growing consistently, 3-year CAGR rate of about 39% over there. What we need to be watching out for is the margins, because in FY22, this metric was at 34%, fell to 23, then recovered to 27, 25, 27 again. So basically what we want to understand is what is going to be that one growth lever that is going to push margins back above the 30% mark that we had seen 4 or 5 financial years ago. And of course, net profit Also a consistent compounder over there on that front, 25% net profit growth in the last 3 years on a CAGR basis, so looking good over there as well. Now let's talk about the balance sheet of the company. Equity of 35 crore rupees, other equity in terms of their profit and reserve standing healthy at 550 crores. The book value at as of FY26 stands at 585 crores. Zero borrowing, net a debt-free company, so looking good over there. Cash in the bank now at 165 crores, which is a sharp fall from the 311 crores that was there in FY25. Talking about cash flow from operations continues to be steady, but there has been a little bit of a blip between FY25 and FY26, where that metric has come from 187 crores all the way to 114 crores. In terms of EBITDA, that growth has been consistent. What we want to be watching out for is the conversion, the cash flow from operations, that conversion to EBITDA, that was as high as 79 and 88% in the previous two financial years, and for FY26 that metric has dropped all the way to 50%. So what is leading to this lack of absorption, this lack of conversion from cash flow into EBITDA? Why this fall from 80s to 50s? We are going to be talking to the management about that as well. And in terms of net cash flows, that amount stands at 17 crore for FY26. Let's talk about the return ratio. The return on capital employed used to be as high as 90% in FY23, 93 in FY24, and then we've seen about a half cut coming in, a sharp moderation of about 50%, 48% for FY25 is where that metric was, and 52% in FY26. So what's happening on this front? What is their strategy to grow ahead organically, inorganically, and what does that do to their ROS factor? We are going to be talking about that with the management as well. Let's talk about the shareholding. Promoter shareholding has been steady throughout, solid company on that terms, 80% promoter holding throughout and as latest as 2026. FIIs have been chipping off little stake in the company from 4 to 3 and now 2% in 2026. DIIs, they have maintained their confidence in the companies, and that stake stays stable at 4%, and public ownership of the company that's out for retail investors, that's at 14% as of now. Number of shareholders standing at 59,000. Let's focus and talk about valuations now. If I take a look at the 1 year forward PV of the company in terms of 1 year forward price to earnings, this company trades at 13 times. What's very interesting is, remember, when the company IPO'd, the 1 year forward valuation was 28 times, which means ever since the company has IPO'd, the valuations have been trimmed into half. The stock price has fallen also by 50%, and that is something that we are going to be watching out for in terms of what is the opportunity for valuation run up over here. Can the valuation catch up once again? Is there a possibility for the revenue to grow, and consequently will the share price reach those IPO levels for Crizac? We are going to be talking about that as well. The 6-month range when it comes to 1 year forward valuation is 15 times. The stock is at 13 times right now, so fairly valued on that front as well. But yes, sharp moderation coming in from its IPO day valuations. And lastly, let's take a look at how the analysts are recommending this stock. What is the coverage that's coming in? Not a lot of analysts tracking Crizac. You have about 2 analysts who are tracking Crizac, and both of them have a buy call on the stock, and the upside potential from here is about 66% for Crizac. So that's the way the street to some extent is also evaluating this stock. So basically what we understand from the company is solid company. The revenue growth has been solid. EBITDA and PAT growth have been solid. One factor that we are going to be getting some clarity on from the management is going to be the conversion of cash flow to EBITDA that has now fallen from 80 plus levels to just 50% now. So we're going to be talking about that. And on that note, let's welcome the guest on board. We've got Mr. Vikash Agarwal, the CMD at Crizac, joining us on the show. Mr. Agarwal, hi, good to be speaking with you. We've been looking at your company, we've been diving deep into your numbers. So let's start by talking about your numbers first. Your revenue guidance has been around 25 to 27%. Last financial year, you've clocked in growth of about 23%, which is in the ballpark of what you had guided, but still not quite there yet. Can you talk to us about 1 quarter into FY27? How is this financial year shaping up for you? And is that 25 to 27% growth number for FY27 looking visible right now?
Hi, thanks for having me in your channel. With reference to growth projections, we had always been giving a guidance of roughly 20% growth year-on-year basis. We achieved almost very close to the guidance what we had given. We had given a guidance of 1,046 kind of, and we landed up very similar 1,050 is what we had given earlier for end of year FY26. As we all are aware, there is a bit of a geopolitical instability, especially because of Iran war in between from February onwards, has affected the student movement. Students are going to Middle East. At the moment, they have put a pause on their travel and admissions, with currency going uh, up for GBP, rupee depreciated very heavily. That has also made people to take a pause as cost of their education has gone up by 10 to 15%. Again, because of this geopolitical instability, the mid intake, which is normally happens in May, that was also impacted. Airlines and everything went top of the roof, which has made us not to give clear guidance because till date we don't have a very clean visibility how things are going to turn up. Though we always hear that okay, the war is over, but again, day in or day out, you hear something from Trump that okay, if this is not happening, we'll do something else. So it's kind of a wait and watch, and we're waiting for a bit more clarity to come before giving a forward guidance for next year.
Okay, understood. And we take that point. Mr. Agarwal, what I'm trying to understand here is this is not the first time that the company has seen disruption like this in terms of your services, right? You've seen a much leaner period all the way back in COVID. Talk to us about how your growth shaped up, and once COVID recovered, how quickly was the transition for students to move back abroad or enroll fresh abroad? How much time did it take for that confidence level to come back? And I'm just asking that because I'm trying to understand that now that the war is well behind us, what could be the timeline by which you could have better clarity?
It normally takes roughly 6 months for the students to get the confidence. If I talk about in the past, yes, we had seen very similar things back in 2011 during the COVID as well. And whenever something like these kind of events gets removed, there's a pent-up demand which comes up, and you'll see a catch-up where the students suddenly decide that's okay. Now we don't want to miss or give a bit of a gap on my studies. Let's go because the world is back to normal. These things happens anything between 6 months to a max of 1 year. We have seen in the past, and we believe a similar trend to happen. The desire of going abroad or studying in overseas is not changed. So that demand is still intact. Uh, it's just a geopolitical things which is kind of suppressing the desire at the moment. As soon as this clarity comes, there will be a pent-up demand and things will become normal. So yes, you'll see the same demand and everything in 6 to 12 months going forward. And these things
Understood.
get catched up very fast.
Understood. So maybe then we'll have better visibility in terms of your revenue growth guidance. But moving away from that, Mr. Agarwal, Crizac is moving from being a traditional service provider company to students, and now you're even foraying into other segments like visa services, accommodation, and a lot of other ancillary services as well. Talk to us about what is the revenue and growth potential when it comes to these other services, and how big of a part or how big of a revenue contributor could these services become for you, let's say, in the next 3 to 5 years?
Sure. When we decided to go for listing, we had always mentioned this to our investor that there are a lot of value-added services which we can include in our platform. Some of those were visa services, accommodation, and loan. These are the service which every applicant look for, and we want to create a Crizac platform which is a one-stop solution for the students. We have added accommodation and loan services to our platform 2 quarters back. And we are seeing a very healthy uptick from all our partners. This will take a bit of time to grow, but as it grows in 3 to 5 years' time, we expect this will help us grow 3 to 4% in our PAT margin. So that will improve our EBITDA by almost 3 to 4% from what it is
So
at the moment.
Okay, and that brings me to my next question, Mr. Agarwal. You know, your EBITDA margins have constantly been sub 30 after seeing that 33% level about 3 to 4 years ago. Then we've seen this range be maintained between 22 and 27%. Once these services start becoming more active contributors, let's say in the next 3 to 5 years, do you believe that is going to be a moat enough for your EBITDA margins to jump above the 30% mark yet again?
Yeah, that's possible. The 22-year was an exception. We received a lot of bonuses and other things because of COVID and post-COVID effect. But because of this value-added services, yes, the profit margin and EBITDA will grow.
Okay, understood. And also, I want to talk to you about your geographical contribution for your UK business that now contributes to about 96 to 97% of the overall revenue. You have said that you want to bring this down to 60% over the next 2 years. Talk to us about what impact does this have on your financials? How will the remaining 40% new emerging geographies, how will they balance out this impact that we'll see on your financials?
Yeah, we have always mentioned that we want to expand our source market and destination market. So, before coming to the destination market, we in the past had said that we'll bring down our source recruitment non-India to less than 50%. This year, 48% of our total number was from India and 52% was from the rest of the world. UK, definitely our concentration is high for the reason that UK is the most welcoming destination in the world at the moment. US, you're not getting a visa appointment or a visa slot for students, and there are challenges in Canada and Australia at the moment. That's why UK being most welcoming has a highest concentration. We are aiming to reduce this one, and as a result, we are trying to expand into more and more source market because, say for example, people from India may or may not get a visa chance to go to USA, but from China or other places, they are more welcome. Likewise, we are trying to create a multi-destination, multi-geography corridor as well, bringing students from Africa to India or taking students from, let's say, Southeast Asia to China and so on. So we are working on that. That should help us bring down our concentration for UK to less than 70 or 60% in coming years. But yes, these things also depend upon different government policies where we don't have much of a control. But making these changes would definitely help us reduce our concentration and risk for any particular geography.
Okay, understood. Mr. Agarwal, on that note, can you give me a little bit of a breakup between your margins from the UK business versus the non-UK business and how this mix could shape up in the next 2 to 3 years by when you're trying to reduce this concentration on UK?
Definitely, UK has a better margin compared to the rest of the world, but there is not a huge difference. As you grow on volume in other destinations, our margin take per client would remain almost in line with what we are getting in UK. So there will not be a big impact on margins.
Okay, understood. So that's the outlook coming in over there. And if I could just prod a little bit more on that front, Mr. Agarwal, can you give me also a revenue breakup in terms of your UK contribution versus non-UK contribution once the UK dependency is lower?
It will go on a pro rata basis. So once UK numbers or concentrations goes down, let's say for 60%, in that case, the revenue contribution will go in line with same way. So 60% of the revenue would be contributed from UK side, while remaining will come from the new destination.
Okay, and now I just want to shift the conversation to your cash flows. Mr. Agarwal, your FY26 cash flows have seen a little bit of a slowdown compared to previous years. And the other metric that I was looking at, and I wanted some clarity from you, was the conversion of cash flow into EBITDA. In FY25, this absorption rate or this conversion rate was at 88%, and now it has slipped all the way down to 50%. What is the leakage? What is the slippage over here? And why has there been such a moderation in how much of your cash flow gets converted into EBITDA?
Sure. I just wanted to point it out.
Sure.
Manjusha, you mentioned that the balance in the bank is 130 CR, which is a mistake, as if today the balance in the bank is, as on close of 31st March, it was 450 CR. So that's why you're seeing a difference.
Okay, understood. So that makes a lot of sense. Okay, we'll try and rectify those numbers as well. But talk to us about what is the plan going ahead in terms of organic versus inorganic opportunities. Your ROCE, it continues to be strong despite seeing a little moderation compared to previous years, of course. But what is the plan ahead now that you're pouring into so many other services? How is that going to translate for your ROCE as well?
Sure. As a company, we are trying to expand our footprint in all the geographies. We are outside India, inorganic growth. Acquisition is the fastest way of expanding, which we are doing on a regular basis. We're also trying to use our cash to create a new market, both from destination and source. So we are looking at growing both organic in new destination market. We have expanded into, for example, European countries such as Germany, France, Netherlands, in an organic way. We are also looking at, we have expanded into, let's say, New Zealand via an acquisition. Now we can recruit students from across the world who wish to go and study in New Zealand. So both these levers we are trying to use to create more and more choices for the student and agents in our platform, that they can decide to study from anywhere to anywhere they want to go, and getting a better opportunity for everybody.
Okay, on the back of this acquisition news, Mr. Agarwal, I have a couple of more questions as follow-up. First of all, are these acquisitions immediately going to become revenue and margin accretive to your business? And second, how are you going to be funding these acquisitions? Is the cash in the bank enough for that? Are you going to be looking at any fundraisers anytime in the near future?
Most of the acquisition what we have done has done for some specific purpose. Say, for example, the Visa Monk which we acquired was for getting expertise into visa services. EduMentor was for getting capabilities into AI in company. Company has sufficient cash sitting on our balance sheet. So all this acquisition will be internally funded, and we're not looking at raising capital for any of these funds unless something very attractive and big comes up. So companies sitting on a very healthy cash for any kind of acquisition we look for.
Understood. That sounds good. Mr. Agarwal, on the back of these acquisitions and the plans you have, do your dividend policies, your payout policies, will they continue to remain above 60% as and when you keep acquiring?
So yeah, we have declared on our DISP and ISP that we will be paying minimum of 40% dividend for next couple of years. So definitely our dividend payout will be more than 40. If we are not able to use the cash what we generate, we would pay out as a dividend, or else we'll use that for acquisition. But minimum 40% dividend is what we have guided to our investors, which will remain intact.
Understood. And the other factor that I wanted to talk to you about is this entire UK-India CETA that is going to be in effect very soon. Talk to us about what this does to your existing UK business. What is the demand that you're seeing for UK right now? And if that demand is in line with your plans to reduce dependence, or do you believe that demand is so strong for UK on the back of the CETA that maybe your dependence target that you have for UK in terms of its contribution could take a little bit longer?
Definitely, because all these factors, the demand for UK is strong and which will remain strong. We have no interest to cut down on our demand. We want to grow other destination more so that the consumption goes down. Yeah, it would be a bit of a challenge to reduce our concentration in UK, because UK is most favorable destination with all the both all microeconomics and macroeconomics supporting it. So UK concentration would remain strong for next 12 to 24 months, what I see. Once policies for US, Australia, Canada changes, our consumption should go down steeply, and UK should come down to roughly 60-65%, while the rest of the world should take the balance.
Okay, understood. Mr. Agarwal, I'm just trying to look at the other side of the story here, and I'm trying to chalk out some risks for the business. Let's say if your existing clients, what are the chances, I mean, if they use another platform to avail the services that you provide, what kind of an impact could it have on the business, and then what would the plan be ahead?
There are definitely multiple platforms even today available in the ecosystem. So I don't expect any effect of a new platform coming into the market and disrupting us. We have a very deep integration with universities and a very strong relation with all our clients, which are long-term. The kind of investment we are putting on the tech, we are making a company AI-enabled, and we believe because of all the investment we are putting on tech and the deep relation what we have with the universities, we will not have any major impact because of any newcomers or new companies coming into this market.
Understood. So that's the word coming in over there, and also the new capabilities that you are building, and you are creating these avenues of artificial intelligence and machine learning for the company. Talk to us about how easy does that make operations for the company, and what kind of boost will it give to your revenue and margins?
Sure. Crizac is trying to become an AI tech first platform. This would make life of all our clients very easy. You'll be able to search and get all the informations on real-time basis. Any kind of suggestions what they are looking for can be, they can just ask like what people would ask to a chat GPT or any of the new AI search engine. We are trying to create a robust system which helps institutions, which helps all our clients and all our staff internally. These AI and automations would improve our productivity, make the life of all the employees and clients much easier. This will have some benefit on our revenue and margins, but reason why we are becoming AI is not for saving money, but to make the platform more robust, more user-friendly for our clients and students. We want Crizac is a market leader, and we want Crizac to stay as a market leader ahead with all the technologies which are coming up.
Understood. And just to sum up this conversation, Mr. Agarwal, 5 years down the line, 5 years hence, if you and I are having this conversation once again, what are going to be some metrics that you are betting big on today that could bear some fruitful results for you 5 years down the line?
5 years down the line, I'm very bullish on India as a destination. Crizac is investing very heavily on making India a destination market, recruiting students from all over the world, especially Africa, other Southeast Asia, Latin and other places. And I'm very bullish on that. I believe we'll be able to create so many multiple corridors that students will be able to really give proper value to student mobility, global mobility. And yeah, that would be what we'll have a discussion 5 years down the line.
Okay, and looking forward to catching up with you 5 years down the line, of course, many times before that as well. Mr. Agarwal, it's been a wonderful time chatting with you. Thank you so much for your time. So viewers, that was the management of Crizac on ET Now, talking to us about their growth plans, their plans on the AI and machine learning front, and of course, what happens to the margins, the cash flow going ahead, the dependence that they want to reduce on the UK business, debt-free company, solid financials, and valuation-wise also looking very attractive. With that, it's curtains down on this edition of All About Your Company. Thanks so much for watching.